Well, good morning and welcome to Business Morning. I'm Ladi Williams. Today we'll take you through the latest developments shaping Nigeria's economic landscape and the financial market. We'll track movements across equities, fixed income, currencies, and commodities as investors continue to navigate a rapidly evolving environment. This is Business Morning. We're glad to have you. Let's kick off now with commodities. We've seen oil prices. They're down more than 1% today, extending losses from the previous session on signs of some progress in restoring crude flows through the Strait of Hormuz, following U.S.-Iran peace talks. So we're seeing red on the screen now for oil, 79.89. That's 1.30% lower. So if you're shorting oil, you've been shorting since Monday, you're definitely in profit. That's looking for the traders out there. WTI crude, 72.92, 1.26%. Lower. So from a weekly drop last week, seems we're heading for another weekly drop. That's for oil prices. They dropped about 3% on Monday after the United States granted Iran a 60-day sanctions waiver following initial peace talks, and as officials reported a lull in hostilities in Lebanon under the broader agreement. And we still see analysts there trying to understand the winners and losers, when it comes to the tensions between the U.S. and Iran and Israel at this point. Did the U.S. get what it wanted? Did Iran get what it also wanted? But at the end of the day, we see oil markets reacting to all of those action right there. All right, to other matters now. Domestic crude oil supply to Nigeria's refineries, that declined in May, highlighting persistent challenges in securing feedstock for local refining. Latest data from the Nigerian Midstream and Downstream Petroleum Regulatory Authority shows that domestic crude deliveries fell to 15.84 million barrels, down from April, despite decline in the country's refineries processed. They processed about 17.92 million barrels during the month, with imported crude making up the shortfall. The figures underscore the ongoing efforts to boost local refining capacity while ensuring a steady supply of crude to domestic plants. So they have the latest there when it comes to refining and oil production. All right, let's get a check on how your money performed yesterday. Nigeria equities market bounced back strongly on Monday, snapping a 6-session losing streak that had wiped out more than 5 trillion naira in investor wealth. Investor sentiment turned positive as renewed buying interest in Tier 1 banking stocks, particularly First Holdco and GTCO, propelled the market higher, adding 1.52 trillion naira in value. And you see for volume of trades there, 489.05 million, valued at 36.71 billion naira, 63,747 deals. That's what we had yesterday. Flip over to other parts in the market now. We see, financial services topping gains yesterday. GTCO, First Holdco, they both fell last week, about 10%, double-digit losses, over 10% losses for the whole trading week last week. But we're seeing gains there, 10% each for GTCO, First Holdco. International Energy Insurance also joining there, 9.88% higher. Then we have Zikis, Consolidated Hallmark Insurance PLC, Eterna. This one has been on a downtrend for a while now. Profit taking has continued. I would see another 9.90% gain. Despite the gains we did see with oil and gas stocks, the likes of Seplat, those ones did very well. They're up over 90% so far. That's year to date. But Eterna, nope, that's not doing too well. Fidelity Bank, 48.75 million traded yesterday. UBA, all financial services yesterday. Access Core, 39.42 million traded. So we'll see how if the bulls can sustain the market today. That's for trading today. All right, to other matters now. The Securities and Exchange Commission, they've signed a memorandum of understanding with Rwanda's Capital Markets Authority to strengthen cooperation between both regulators. SEC Director General Momotimi Agama announced the agreement in Abuja following talks with Rwandan delegation led by Capital Markets Authority CEO Romeo Ngarambe. Under the MOU, both sides will collaborate on investor education, capital market development, regulatory information sharing, capacity building, and enforcement oversight. Mr. Gama says the partnership reflects a broader push for greater interaction of Africa's capital markets with a focus on cross-border collaboration and development of new investment products at this time. So definitely, I'm sure investors are still looking at how they can trade stocks between countries at this point. So another collaboration right there. Then we see Nigeria's fixed income market witness a surge in activity last week as investors aggressively repositioned their portfolios amid rising yields and persistent inflation concerns. Treasury bill turnover jumped an impressive 137% to 1.51 trillion naira, while FGN bond trading volumes that climbed nearly 76% to 1.2 trillion naira. The sharp increase in market activity that comes as investors demand higher returns, pushing yields across most maturities higher and highlighting an ongoing repricing cycle in Nigeria's debt market. But when you see more yields there, that means it's increasing the cost of borrowing. That's for the government, but investors are happy right there. All right, we see the federal government, they're ramping up pressure on cement manufacturers. They're saying they need them to lower prices, warning that persistently high cement costs, that's escalating the cost of public infrastructure projects and forcing contractors to seek contract variations. Speaking at the unveiling of Africa's new corporate identity as HBM, following its acquisition by China's Huaxing Group, the Minister of Works, Senator David Umahi, stressed that more affordable cement is critical to delivering Nigeria's infrastructure agenda efficiently and sustainably. Let's look at money supply now. Nigeria's broad money supply, also known as M3, that increased to 129.21 trillion naira last month. And this is according to latest data from the Central Bank of Nigeria. The figure, which represents a 3.38% month-on-month increase from the 124.99 trillion naira level recorded in April, reflects continued expansion in liquidity across the economy despite the CBN's decision to maintain a tight monetary policy stance. If my producer can put that up for me, we see the increase there. Money supply was supported by growth in quasi-money, net foreign assets, net domestic assets during the review period. Further analysis shows that both foreign and domestic asset positions contributed to the expansion in money supply. That's money supply. Let's look at that data. It comprises currency in circulation outside banks, demand deposits, savings, and time deposits, well as foreign currency. There you have it. Broad money supply, 129 trillion. For the previous month, 124 trillion. So we see an increase there of 4.22 trillion naira added right there. And definitely we know the relationship between money supply and inflation. And we see the CBN there trying to mop up excess liquidity from the economy. So that's the latest data for May. We'll definitely be tracking the next one for June. All right, to other stories now. Global ratings agency Fitch Ratings have raised fresh concerns over Nigeria's proposed $5 billion total return swap financing arrangement, warning that while the deal could provide much-needed funding, it may also expose the country to additional debt management and liquidity risks. The caution comes amid growing scrutiny from international institutions, including the IMF, over the transparency and potential liabilities associated with such complex financing structures, even as the federal government explores alternative funding sources in a high interest rate environment. So far, there have been at least two major warnings regarding Nigeria's proposed $5 billion total return swap, the deal with the First Abu Dhabi Bank, the International Monetary Fund, and that was the first, and now we have the latest from Fitch. So let's see if we heed some of the advice there. All right, the federal government is focusing on translating policies into measurable economic outcomes that will drive industrial growth, expand trade opportunities, and attract more investment into Nigeria. Minister of Industry, Trade and Investment, Mrs. Jumoke Oduwole, stated this in an event. She gave a scorecard of the national industrial policy, which is yielding positive gains to the economy. Take a listen.
Please, may we be seated.
The 2026 Top Management Retreat of the Federal Ministry of Industry, Trade and Investment brings together top government officials, heads of agencies and industry stakeholders to assess performance and chart a path for greater economic impact. The retreat, with the theme From Policy to Performance, Driving Industrial Growth, Trade Expansion and Investment Outcomes, focuses on strengthening implementation, improving collaboration and delivering tangible results across the ministry's mandate.
Data, figures will continue not to make sense to the Nigerian people. It's only when we are able to dutifully deliver prosperity that the common man begins to feel it. That is when our work would have been done, and that is when we can lay claim to success.
The Minister of Industry, Trade and Investment, Mrs. Jumoke Oduwole, used the opportunity to highlight Nigeria's gains in trade, investment and industrial development in 2025.
Across trade and investment, we are advancing a pipeline of strategic agreements and partnerships that will open new markets, attract capital, and strengthen Nigeria's position within regional and global value chains.
The ministry is focusing on 4 key priorities for the year 2026, including expanding access to regional and global markets, strengthening domestic industrial capacity, mobilizing strategic investments and leveraging data, digital technology, and artificial intelligence to grow the industrial sector. Key development partners are pledging their support to this cause.
No country thrives and survives in isolation anymore. In view of all this, there is an urgent need to build a stronger base for an accelerated, inclusive and sustainable industrialization of Nigeria. This requires building a strong partnership and creating a jigsaw fitting of key partners across public, private, and international organizations.
As deliberations continue, attention remains on how policies can be effectively translated into industrial growth, job creation, expanded trade, and greater investment inflows. Sarah Achimugu, Channels Television News.
All right, now to our first conversation. Nigeria's electricity sector may be on the cusp of another major transformation. The Nigerian Electricity Regulatory Commission, that's NERC, they've introduced the Net Billing Regulations 2026, a framework designed to allow eligible electricity consumers who generate power from renewable sources, particularly solar, to supply excess electricity back into the grid and receive credits in return. The initiative is expected to encourage greater adoption of renewable energy, improve energy security, and deepen private sector participation, and support Nigeria's transition to cleaner energy sources. But questions remain around implementation, consumer participation, pricing mechanisms, and whether the country's distribution infrastructure is ready for this shift. To unpack the implications of the new regulation and what it means for electricity consumers, businesses, investors, joining me now is Engineer Adamu Haruna Ibrahim, Principal Manager, Renewable Energy Development Department at NERC, and the Manager, Research and Data Analytics Division, also the NERC. Great to have you on the show, sir. Good morning. So please help us break this down even more, because I've heard that it's not every inverter solar panel owner that can actually get involved, in this, and some, I'm sure, are hearing this for the first time. Tell us exactly how net billing works and who can participate.
Okay, good morning. So the net billing regulation is a framework which the Nigeria Electricity Regulatory Commission developed, and the essence of the regulation is to allow prosumers, that is people that have renewable energy installations in their homes, can export their surplus energy to the DISCO network and get credits as a compensation for their energy. So the idea is the minimum threshold will be around 50 kilowatt peak, and the maximum will be 1 megawatt peak.
So I'm guessing someone that has maybe about 6 panels and maybe a 10 kVA inverter, do they have access to this?
No, for now they are not eligible.
So who are we talking about really here? How many panels do you need to have, and what kind of capacity really?
The capacity is, the minimum is about 50 kilowatt peak. I cannot do the calculations right now for it. And then the maximum threshold will be around 1.5 megawatts peak.
Okay, so I guess, well, it's not for everybody, at this point.
It's not for everybody. For now, some residential will be able to participate and some commercial and industrial customers will be able to participate.
Okay, all right, let's look at our renewable energy, the numbers there. We see solar panel imports in 2025, about 2.9 million panels. Solar imports in March 2026, about 1.2 gigawatts. Installed solar capacity added in 2025, 803 megawatts. And we see total installed solar capacity about 1.19 at this point. Looking at these numbers, how are we doing, compared to other countries that have this policy?
Yes, I think Nigeria is doing well so far, but I don't really have the statistics as to what percentage we've gone, but I think Nigeria is also doing pretty well, and that's one of the drivers behind this regulation. Since we have a lot of solar adoption in the country, we want to encourage people to put more solar panels and be able to export their surpluses and get something. This will increase the reliability on the grid.
All right, so we see the regulation introduces the concept of prosumers. That's consumers who also produce electricity. How significant, is this, shift for Nigeria's electricity market? We know we've been struggling with a lot of issues now when it comes to installed capacity and what we actually generate, for the grid. Is this really a game changer, or is it just something that will pass?
Yeah, I think it's a very good game changer to the industry. For the first time, Nigerians will have the ability to export their surplus. The prosumer is typically somebody that is also connected to the disco network, which means it's importing energy from the disco network. And at the same time, at certain times of the day, probably when the sun is high or his batteries are charged, his surplus, instead of lying waste, doing nothing, so he can now export it and get like compensation to offset part of his energy that he has imported from the disco network.
Right, and talking about the discos at this point, we do see revenue and collection efficiency, amount billed 706 billion, that's for Q3 2025. They collected about 570. So collection efficiency, it seems that's been, improving, so far. But how does this policy, how do the GENCOs coming here, for this policy, and the discos actually?
Okay, so the advantage for the disco is the ability to get cheap source of power from prosumers instead of relying on the grid. So this is like part of augmentation to the grid to increase system reliability.
All right, so there's still challenges, at this point within the sector. How much of the challenges do you think you're going to be able to solve, with these regulations, and when it comes to consumer participation? How much can you solve with this?
Okay, so with the introduction of this regulation, we expect more development in renewable energy sources, which will add to increase the energy mix. The renewable energy portion of the energy mix will now be increasing, and I think over time it should bring down the prices, because basically the integration of the renewable should crash down the prices for the grid supply.
All right, and I'm sure some of us are still, trying to understand the eligibility requirements at this point. You did mention it's more for, industrial level,
commercial and
users at this point. So
yes.
Is there any way in the value chain that, the little guys can maybe somehow, get in there, or they're just left out completely?
Yes, for now, because we are just starting this, we want to start with the 50 kilowatt peak. But going forward, if we see that there is a lot of improvements in the reliability of the distribution system network, the Commission might consider bringing down the threshold. But for now, we want to start with the 50 kilowatt peak and see how it goes.
All right. So at the end of the day, most of these prosumers that believe they want to get involved, I'm sure they want to know what's in it for them. At this point, you've talked about the credits and all of that, and I'm also wondering what you're seeing for adoption. Do you see, most of these consumers actually turning into, prosumers? And what are you making, from this really, as a prosumer?
Yes. So I think for the prosumer, it's an opportunity to either reduce his energy bill, or in some cases, if you are even exporting more than you are importing from the DISCO network, even earn some credits in advance for the anticipated energy you take from the DISCO network. So it's a win-win for both. For the DISCO is getting cheaper energy to increase reliability to customers on their network, while the prosumer also gets part of gets his compensation to augment part of his electricity bill, or even go on credits for energy that he using. So there is a provision for carry over credits for prosumers that export more than they import from the DISCO network.
Right, and definitely that would also help if everyone is able to afford, to get a solar system. We know the price; it's not cheap. Getting the kind of capacity you want to get that would power your house and also allow you to have excess, to want to sell. So, what is NERC doing to help when it comes to affordability, so that more Nigerians can actually install these systems and, pay flexibly and don't have to spend too much?
Well, the NEC being a regulator, we might not be really involved directly in arranging this, but we have a lot of companies that are coming up, and I think this is an opener to them. Now that they have seen that the prosumer will gain something out of this, they can go ahead and try to take this opportunity, take advantage of this, our regulation, to see how they can engage with the customers, to give them these solar panels on the credit, so that they can improve their reliability on their end and also be able to recover by selling the excess.
All right, so at this point, I'm wondering how the infrastructure is ready for this. Do you think Nigeria's distribution companies, have all it takes right now, the technicality to accommodate like a two-way electricity flow, on their network? Or do they need some kind of investment to make this happen? Because I know they keep complaining about, they're not making the money they expect to make.
Yeah, so that is why part of the requirement for any prosumer to be connected is the feasibility studies by the DISCO. So once a prosumer applies, the DISCO will carry out technical feasibility on what needs to be fixed on their system if there are issues. And if there are no issues, then they give the go-ahead to connect it. So part of the advantage of this regulation is also gives the DISCO, because it will now be on a feeder-by-feeder basis. So the DISCOs will have the opportunity to identify that, yes, this feeder where we have the network is fit to connect this particular prosumers, and if they need to do something, there will be a timeline provided for them to fix this and accommodate the prosumer.
So is some kind of investment still needed, from the DISCOs to get on board?
Yes, they might need to make some investment to make feeders ready, which they are aware of. So the DISCOs were part of all the deliberation stores bringing up this regulation, and they've indicated interest that they have the capacity to do this.
Okay, all right. So there's also this argument about, the DISCOs and renewable energy, that they don't really have that relationship, at this point. The DISCOs, they're not really keen on renewable energy because that's like competition, for them. So how are they going to get that balance? So
the Commission has already directed that the DISCOs must take at least 5% of their energy to renewable energy sources. It's a directive, and the DISCOs have previously been complying with this directive. So yes, the DISCOs are already, there are other DISCOs that have already gone to bilateral with the developers to also inject renewable energy sources.
Right, and so would you say NERC is doing enough, right now to educate everyone? Apart from this interview, what else are you doing to, get as many people on board?
Yes, so we had stakeholder engagement on this net billing regulation before the passage of the regulation. After this passage of the regulation, we intend to have other engagements, stakeholder engagements, to explain to you and demonstrate that this is something that we can do.
All right, definitely be looking out for it. I guess we're creating a new market there, maybe some kind of carbon credits, and hopefully I can spend less, on electricity, when this, becomes fully adopted. Thank you so much, Engineer Adamu Haruna Ibrahim, Principal Manager, Renewable Energy Development Department at NERC, Manager, Research and Data Analytics Division. Great to have you this morning. Thank you so much, sir.
You're welcome. Thank you.
All right, so all of us now, we've been tracking what's playing out with the oil market, trying to understand if we're going to go higher or lower, but we're going lower at this point. We'll find out what's happening with oil prices right after this break. Just stay with us. All right, let's find out what's happening with oil prices now and other top commodities. Joining me now, we have Dumebi Oluwole, Manager at Financial Derivatives Company. Great to have you, Dumebi. Good morning. I guess we were kind of expecting what we're seeing with oil prices, seeing what played out last week into the weekend. So now we've had 2 consecutive sessions of declines. Do you think this is based on this improving flows, through the Strait of Hormuz, or is it something else, that we're not seeing?
I mean, all the cards on the table. The first thing that we're of course considering right now with the trending oil prices is the progress on the US-Iran, talks, and the fact that they have signed a memorandum of understanding and are looking to ensure that there's a level of, of implementation that happens within the next 60 days. The markets are of course pricing that in, and that's one of the reasons why we're seeing oil prices fall. There are risks as well to that, deal actually pulling through, or the agreements even seeing the light of day. On top of the conversation is, the war strikes with Lebanon and Israel. That is of course on the table. There's conversations around on freezing, all of Iran's assets that have been frozen since the 1980s. So that's of course on the table, and there are conversations around that, frozen. And if all of it is unfrozen, again, like I mentioned, there's a risk on there because the markets are not necessarily pricing in that all of the monies and all of the assets of Iran would actually be unfrozen. Then the final risk as well is, Iran continuing its uranium progress and program, and them of course continuing, coming to the table in terms of nuclear arrangements, just like other countries that we're seeing globally, take on that stance. So I will say that that's like the major, factor really affecting global oil prices. The risks as well are still there, and that's why we're seeing oil prices dance around $80 per barrel. And I guess the major implication, or what we can watch out for, is number one, oil prices, the markets will definitely remain unforgiving, and oil prices will likely, keep trending downwards, like you have rightly pointed. And the forecast right now is around $75 to $85 per barrel. Oil prices actually retaining that trend. The second outlook here is that the risks that we see that I've mentioned do not escalate. The expectation here is that all of the parties and mediators, including Qatar and Pakistan, help ensure that the communication lines between US, Israel, and Iran remain strong, and the mediation remains progressive to ensure that this risk that we have, highlighted doesn't necessarily see the light of day. And I guess the final outlook here is what this means for the broader market expectation, and especially monetary policy. But I'm happy to check if you have other questions. I've been speaking for a while.
It's quite interesting because, when you look at the geopolitics of it at this point, the U.S., they had plans. That's why, they had to, go through the route, and, we had to see the impact on, oil prices rising, so high. But looking at Iran at this point, we're hearing, some segments there in the U.S. saying at this point, Iran won, that the U.S. did not get exactly what it wanted because they still have, their enriched uranium at this point. sanctions are being eased, their oil exports are resuming that were not there before. So how's it looking in your view? Who's winning here?
Personally, I'm not really sure it's about who is winning and who is not. I think the facts are this was a war of choice. It was a highly unnecessary war. We didn't have to be in this position. The world didn't have to take the hit, and that's exactly why it's seeming like, Iran is winning. And I will say that based on the fact that we know that this is a war of choice and the world has experienced uncertainty since 2020, I think that most analysts and even the rest of the world, especially emerging and frontier markets, are beginning to reconsider, alliances, are beginning to reconsider their competitive advantage, their comparative advantage. And this just, for me, means a new global order. And I think I've been saying this for the last, 3 months or so. And it's just generally because I think that this is the case, not because the U.S. will not remain a prominent or global global economy, but I do think that at the middle of the pyramid, where you have a lot of emerging and frontier markets, I do think that a lot of conversations will continually happen. I think that we would see a lot of intra-regional trade, regardless of religion, regardless of beliefs, between emerging and frontier markets. I think that commodities like crude oil will definitely remain, top of mind, but that strong shift towards renewable energy would now intensify simply because, the markets and countries have seen how vulnerable they are to the dance in oil prices and how that dance typically stems from uncertainty, which over the last 4 years or last 3 years has highly, and strongly come from the United States. And the final thing that I do see is a very big thing to point out here is that beyond trade, I think that conversations and pressure about security, international relations, and international development within the UN would now become a very, very significant and burning issue globally. Why? Because a lot of emerging and frontier markets that have been excluded from the decision table over the last 3-4 decades are now beginning to spring their voice in unison to ensure that they have a say in the matters that typically, affect them. And that involves, of course, Africa, involves Latin American countries. It involves, small island countries like Barbados. And these conversations are already happening. So for me, it's beyond, who is winning and who is not. It's just a matter of the fact that, number one, it was a war of choice. And number two, it has really, open the ground for a lot of new alliances to happen at the middle of the global strata.
Right. I guess you're telling me that I paid 1314 for fuel for nothing, because of this war. That's what you're telling me. I guess the number one loser is the consumer at this point.
Yes, I definitely agree. And I think that that's where a lot of conversations around the big risks of geopolitics really comes to play here. Industries, business owners and consumers are always, at the back burner and always the hardest hit when, things happen globally and even domestically. And that's why there's a lot of conversations now about the importance of, consumers, business owners being involved in civic building, simply because a lot of the decisions that are made by the political class extremely affects how they run their businesses, how people are able to consume, how people earn money, how people spend money, and the quality of life, which is extremely important of course, everyone, right? So I think that's of course the very beginning. And what this really brings to mind for me when it comes to the conversation around consumer spending is the developing markets, right? So we've seen a significant shift in how people are consuming over the last decade. And now that we've seen shocks back to back from 2019 up until 2026, it means that consumer wallets are playing catch up, right, to how quickly things have changed, how prices have escalated, and more importantly, we're also seeing the policy environment play catch up as well. So it's almost like a rat race to ensure that things become stable, and not until countries begin to focus on the commodities and policies and even the politics of comparative advantage. I think that developing markets will continue to struggle whenever there's a lot of vulnerability in the global space. Bringing this home to Nigeria, I think that we've seen this happen so much, and of course it brings to mind the fact that number one, there has to be stronger institutions in Nigeria. Number two, Nigeria has to focus on, again, comparative advantage and ensure that the key economic resources that we have at our disposal, we are adding value, and it's not just going to happen from the top. My theory is always speaking to comparative advantage from the subnational level, where individual states take advantage of the resources that they have to ensure that they encourage, investments. Number two, they also encourage good and quality life, and more importantly, they are able to, improve their internally generated revenue. And the final thing, of course, is there needs to be more policy, cohesion from the monetary and fiscal side, ensuring there's a lot of monitoring and evaluation that comes to play, and ensuring that every policy that we make, of course, the public have, strong stakes in it and are involved in the conversation. There's transparency across the board, and this is where I stand pretty much on how we can somewhat solve this gap from global to domestic to consumers.
I guess the oil producers, they had a good time, with oil over $100 per barrel. Good for government revenue. We did see, FAC, swell up. The Naira, how's that, translated into the Naira? Is it quite stable, though?
Yes, the Naira has been quite stable. I will say it's beyond, oil prices right now, or the increase in Nigeria's oil production, simply because in the period where we did see the shocks of the war and oil prices significantly increase, that's between February and March, Nigeria's crude oil, from the NUPRC crude oil data was actually around 1.35 million barrels per day, falling from what it was in January, which was around 1.4 million barrels per day. But between April and May, we've seen oil production actually pick up to average around 1.5 million barrels per day. So more importantly, I think the reforms that Nigeria has been taking, the increase in FX reserves, the increase in market transparency, of course the increase in FX supply, we've seen all of that support the Naira stability, ensuring that Naira remains resilient despite all of the shocks that we have seen. I also think that beyond what the Naira is trading at, I think the key factor here is that the resilience of the monetary policy environment right now in Nigeria is of course encouraging more inflows, encouraging investment appetite towards Nigerian assets right now. FPI inflows have significantly surged over the last 6 months and even the last year, and the expectation is that that will continue, considering that monetary policy now is more orthodox and there's stability in FX supply and there's transparency in how the market is trading. I expect this trend to continue, expecting that FDI inflows would also follow suit as we head into 2027, 2028, and I think that would be the case for the Naira. So that has been the trend and the drivers, and more importantly, the outlook for the Naira in the near term.
Right, and how are you seeing the spread between the official and the parallel market? You see that's at about 30 Naira now.
Yes. Of course, that's a concern. But when you look at where we're coming from and where we are now, that's a significantly different environment. We're coming from where the spread was about 60%. Where the parallel market rate was 60%. Higher than the official rate. But now that gap has significantly narrowed. This doesn't mean that the trend that we're seeing now is not worth noting. It is, and I do think that over the next couple of months, the market will likely correct itself. We've seen strong demand and strong demand at the parallel market for FX, but I do see that the central bank is making efforts to ensure that gap is significantly narrowed, ensuring that more demand is of course, moved towards the official market. And primarily, when you even check the quality of the demand at the parallel market, who exactly is demanding for this, you realize that it's primarily individuals. But it's primarily individuals and less of corporate entities. So we expect that trend would, somewhat slow, and then the gap between the official and parallel market would narrow in the next couple of months. If this doesn't narrow, of course, we've seen how big of a risk this is when we look at Nigeria, the FX market from around 2015 up until 2019, and that, of course, is a very big threat to the FX market stability. And I do not think that we will return there.
All right, talking about correction, we did see the local bourse now kick off this week in the green after dropping over 3% last week. We know investors are asking at this point, is this a major correction for the local stock market or just a blip?
I think if we, go a few months back to see where exactly the boost started from, if we go back, a few months to see where exactly the stock market started, we see that there was a lot of frenzy, there was a lot of demand. The stock market was significantly rising. I think in 2025, it gained over 50%, right? One of the biggest and best performing, stock markets, in Africa. I think that the market in itself is somewhat correcting. The frenzy around, the Dangote IPO, the frenzy around new stocks coming up, the frenzy around dividend payments, the financial services sector, doing its number, all of that is beginning to, subside now, and the market is becoming more stable. I don't think that we would see a bearish trend over the next couple of weeks or months, but I do think that market trading will be more sane. But I also expect that as the IPO comes up, that's for Dangote Refinery, as we head closer to it, the bubble will, begin to rise again, as the market, institutional investors, retail and institutional investors begin to, gobble up that stock. So I think that what we are seeing is more around the market just, stabilizing itself, coming from where we saw a lot of frenzy, a lot of demand, and a lot of activities that was really propping up activities.
Right.
Yeah,
I guess, investors, they have that Oliver twist in them. They just want to see it rising, continuously. Well, thank you so much, Dumebi Oluwole. Always great to have your perspective. Thank you.
Thank you for having me.
All right, let's get a check of what's happening in the global economy.
Well, thank you so much, Laddie. Good morning, everyone. Welcome to the Global Space. We start from the United States, where the dollar we see has held firm as traders are positioning for a more hawkish Federal Reserve, despite oil prices inching lower on ebbing Gulf tensions. While the yen we see flirting with a 4-decade low, U.S. Treasury yields remained elevated after a jump in the previous session, with those on interest rate sensitive 2-year notes hovering near a 16-month high, as traders are bracing for the prospect of rate hikes later on this year. Fed funds futures are pricing in 75% odds of a rate hike by September, while the Bank of America, Global Research, and Deutsche Bank abandoned prior forecasts for steady policy and now expects the Fed to raise rates within this year. Market focus has shifted from oil relief now to the Fed pressure, and the bank now expects a modestly stronger dollar amid rising risks of tighter U.S. monetary policy, revising a previous call for the currency to be range-bound. And talking about the United States, let's see how all of this sentiments, a steady and more certain environment between the United States and Iran, how that's sipping into investor sentiment. And our correspondent in Washington, Maria Bed, captured the closing numbers from yesterday in the markets.
The stock market was mixed on Monday, as the Dow Jones was up at 0.2%, the S&P 500 fell at 0.4%, and the heavy tech Nasdaq led the day down at 1.3%. As many investors were hopeful with the peace agreement between the U.S. and Iran, showing some early positive signs in the market. But the big tech industry just could not sustain, as Google and Meta took some major hits on the day, and SpaceX went into its third day straight in a row of a decline. As investors continue to watch what this might mean for the IPO and how it might have some impact in the near future. As investors continue to watch to see how the market turns out, it is clear that big tech industry has a bit of a way to overcome for the rest of the week.
The big tech industries certainly do have a whole lot to overcome, and SpaceX facing the test after the glorious few hours or days that it had. But still staying in the United States, the National Highway Traffic Safety Administration has said that it has opened a special crash investigation into Tesla incident where a Model 3 slammed into a home in Carter, Texas, killing a 76-year-old Martha Avila. Harris County authorities say that the driver, Michael Butler, was cooperating with the investigation on the scene and that he had been using Tesla's partially automated driving systems while his vehicle barreled out of its lane and into the home in the Houston. Tesla CEO Elon Musk went on the defensive, saying in a post on his social media that the crash makes no sense. And of course, we expect investors will react to this when we see their demands or less demand on the products or investments in the markets. From the United States, in European new car sales rose in May as robust demand for electric and hybrid vehicles offset a sharp decline in traditional combustion engine models. This is according to industry data. Registrations across the EU countries and the United Kingdom increased 3.6% year-on-year to 1.15 million vehicles in May, according to the data released by European Automobile Manufacturers Association. European new car sales rose in May as robust demand for electric and hybrid vehicles offset a sharp decline in traditional demand. Battery electric vehicles registration also jumped 39.1% to 268,487 units, while plug-in hybrid rose 13.2%. Electrified vehicles continued to gain traction as petrol and diesel registration fell 19.1% and 19% respectively. Now, inflation in Singapore has held steady, 1.8% in May, falling short of economists' expectation as lower prices for telecommunication services helped offset increases in private transport, accommodation, retail, and food costs. The figure was below the 2% as expected by a lot of economists and unchanged from the 1.8 recorded in April. Higher car and motorcycle prices drove up private transport inflation. Core inflation, which strips out accommodation and private transport costs, came in at 1.4% against 1.6% forecast. The Monetary Authority of Singapore has said that while energy prices have eased recently, they remain elevated relative to 2025 levels. And China's consumer spending slowed down persistent in June with growth during one of the country's largest online shopping festivals, weakening sharply from a year earlier. Total online sales during the annual 618 shopping event, which held May 13 to June 18, grew by 4% from a year earlier, a sharp drop from 15.2% growth that was recorded during the festival last year. Of course, this is from retail data. The figures add to signs that household spending remains a weak spot in China's economy, despite stronger performance in exports and technology-related sectors. Retail sales fell 0.6% in May from a year ago, marking the first decline since China emerged from pandemic restrictions in 2022. And good and bad news, Indian fintech startup Cred. They will raise $900 million in a funding round led by Mark Zuckerberg's Meta, but they have had to lose their founder and chief executive Kunal Shah to WhatsApp. The startup, where Meta will soon become a minority investor, was valued at over $4 billion in its latest funding round. The Indian firm said in a press release that these funds will be used to accelerate growth, build institutional muscle, and extend its leadership across categories. Cred is a platform built for affluent and credit-worthy Indians that rewards them for using it to manage and pay credit card bills. It was founded by Shah less than 10 years ago, and according to the company, now processes over 40% of credit card bill payments in the country and is building a lending business. Meanwhile, Meta's WhatsApp has 500 million people in India using its messaging services, but it's struggling to popularize its payment tool, WhatsApp Pay, in the country's hyper-competitive digital payment space. The social media giant will not gain access to Crest member data, and the release also shared this. Well, I would like to ask who is the next trillionaire. We have to celebrate and reflect on the work of Alan Greenspan. Yes, he died yesterday and at the age of 100, but obviously for the business world, this is a man that's worth celebrating. And you ask me why, I'll give you some reasons there. Reflecting on the work of Alan Greenspan, we see he held the Federal Reserve in the United States, obviously, leadership from 1987 to 2006. And that's the longest till date, the longest individual who has held that. He was appointed in 1987. He served under 4 United States presidents, and he became known for a cautious, data-driven approach to monetary policy. His communication style became known as Greenspan Speak, and a careful statement designed to avoid shocking financial markets. We have more reflecting on that. His beliefs were market-based solutions were just the best. Limited government intervention, I wonder if that would have worked with President Trump. Price stability was a priority for him, flexible monetary policy. And then he had to deal with some major shocks, which obviously made him popular at the end of the day. So major events he managed was the crash in 1987, the stock market crash. There was the recession. He had to also stay on the leadership wheel during that period, 1990 to 1991, the Asian financial crisis in 1997, the dot-com bubble also, you know, we're in a dot-com era now. Well, he had to manage that transition between 2020 and 2021, and then the economic shock in 2001. So no wonder that the world celebrates Mr. Alan Greenspan, and he lived to a good age, 100. So while we miss him on this side of eternity, well, on the other side, he carries his work, and we celebrate him and what he did for the economy of the United States, and it did, you know, spill over to other parts of the world. Well, those are the stories making the rounds on global space.
All right, thank you so much. Yeah, quite the work there from Alan Greenspan. All right, to the markets now. See NGX, that's trading in the green. Access, Chams, ICO getting attention from investors. We're seeing oil prices still down, Bitcoin down, dollar index up, gold is down. What's going up at this point? Just the dollar. John McCall will be back at 1:30 for more updates. I'm Ladi Williams. We're main team right here at Channels HQ. It's bye for now.